It's a brand new year and brand new market action for gold. Joining us to talk about what 2011 may have in store for gold is Brent Cook, the editor of Exploration Insights and a speaker at the upcoming Vancouver Cambridge House show. Thank you for joining us, Brent.
Yeah, good day. Good to be with you, Danielle, and thanks for the chance to talk with you.
Brent, what happens to gold in 2011? What is the recent market action telling us right now?
I think there's a number of things going on in the gold price right now that we're seeing just at the first of the year. I think one is we're seeing a lot of reallocation amongst funds in that, given that they did so well last year and they're just selling a bit of gold stocks to reallocate. I think the second thing we're seeing, which is more interesting, is that there is the indication that the U.S. economy and global economy is beginning to improve. If that turns out to be the case, much of the gold trade, or much of the gold that's being bought recently, and gold stocks, has been a fear trade, at least to some degree. And as that fear trade goes away, if it goes away, if the economy is improving, I think we'll see people moving into stocks and out of gold and gold stocks as well. So that's the second thing that's bringing it down. The third, I guess, is just plain old profit taking. I know, we've had a good year last year and the 2 years, and a lot of profit's been pushed into this year, and I think we're seeing people taking a profit on it this year.
Brett, you touched upon gold stocks. If gold will see a short-term correction, what should your gold stock strategy be?
I think it's interesting. Okay, so we've seen a little over a 4% pullback. That's not really a big deal. For these mining companies, a $1,300 gold price, $1,200 gold price, that is a very, very good gold price. And these guys are going to be churning out a lot of money. That sort of revenue and such is going to show up real well on the books. And these mining companies are making good money. So I think when the funds start looking at mining companies as an actual business, they'll see that this is a good business to be in. So these mining companies are not overvalued, in my opinion, if we assume a $1,300, $1,200 gold price.
Brett, you said the O word, overvalued. Usually when we talk about gold and gold stocks, that's what a lot of people say, that it is overvalued right now. Can you elaborate on that?
Yeah, I don't think they're overvalued. It depends on what gold price you want to plug into the future numbers. But if you plug in $1,300 into a company like Newmont or Barrick, you'll see that these things aren't really that overvalued on a price to earnings ratio basis. But I think what's more interesting, and I think we're going to talk about what is the trade for this year. These companies are burning through, call it 80 million ounces a year. That's global mine production in gold. They're not replacing that, but they're making lots of money with what they do mine. So these companies are going to be in a position where they need to replace reserves. So the trade, in my opinion, I've always felt this way, and that's what I do, is in identifying the company, the junior company that is onto a major discovery or potentially onto a major discovery. That's going to command a very high premium. And we've seen that already in Kinross's takeover of Redback or Goldcorp's takeover of Andean. They paid a very high price for those ounces in the ground because, one, they are very high quality ounces, high margin ounces, and two, they see the exploration upside that gets them not in just to a deposit, but in a mine. So that's the sort of thing I'm actually looking for. And I think that's the trade to be in.
Okay, and finally, Brett, according to you, what sector, if any, is undervalued right now?
I tend to think copper is in for a correction right now, but longer term, copper companies, copper producers, or those development stories that are on the way to production are probably under-owned. I think that's a place to be looking at if we see a correction in copper, which I suspect we will see. Another is uranium. Uranium has been bashed pretty hard over the past few years, but we're seeing a price increase in the uranium. It's up to $64 a pound now. And there are uranium stories out there that I'm looking into that I believe are near production, have reserves in the ground that are near production or in production that are the place to be looking at right now.
Great, fantastic, Brett. Thank you so much for joining us today.
No, I appreciate the interview. I look forward to seeing you in Vancouver. On my website, Exploration Insights, there's a couple articles on gold supply and demand, which I think is an interesting thing we didn't talk about. And there's a couple of videos of projects I've been on. So, take a look at my website, and I'll see you in Vancouver.
Great, great. And if you want to hear more of what Brett has to say, you can come on down to Vancouver at the Cambridge House Show. You can register for the event at the link below. Thank you for watching Kitco News. I'm Daniela Cambone.